Welcome to DACM Insights, where we explore the intersection of traditional wealth management and digital assets. Whether an institutional investor exploring digital assets or a wealth advisor helping clients understand this space, you'll get practical insights from leaders who are actively managing real money in both traditional and digital assets, and the entrepreneurs building the disruptive tech that drives the space so exponentially. Hey, thanks for joining us today, Matt. Pleasure to have you on the podcast. It'd be good if you could give everyone an introduction to how you fit in the whole Solana ecosystem.
Yeah, so I'm the VP of Technology at the Solana Foundation. The Solana Foundation is the facilitating entity of the Solana ecosystem. On Genesis block, we got the treasury, so we kind of use that to help proliferate the decentralization and development of the Solana protocol.
And do you have a background in computer science, and how'd you find your way to the blockchain space?
Yeah, I actually started off in the app space. I worked in machine learning. I'm one of the rare people who moved from machine learning back to to blockchain. But it ended up just like solving a lot of the problems I was facing in terms of global payments. And I worked in games for a little while too. So we're doing these kind of global esports. And so being able to just interact with people's data and payments all around the world, it just seemed like some problems that I just kept on running into. Hey, maybe this blockchain thing kind of solves this. Actually, I even formed a business into it back in 2017 on Ethereum. So I'm a technical co-founder, CTO of it was called Corebox. But yeah, I come from a very technical background, did more math and physics and economics, and then I went into more like the machine learning was the first part of my career. And then I just kind of came, I don't know, you just as CTO, if you're trying to deliver something from 0 to 1, you end up learning basically a little bit of every part of the stack. And then my second startup is a hearing aid startup. Touched even like firmware and stuff, and that kind of prepared me for seeing the kind of the benefits of Solana, a little bit of foreshadowing there. But so that's why like my role at Foundation is really like the whole ecosystem. It's like so I have like this broad skill set. I just named like 40 just different technologies that I've kind of touched randomly throughout my career. So I just kind of help with the app layer, the tooling, but then also the core protocol development itself.
Okay, cool. And with your background, with your experience around machine learning, how do you see the intersection of that coming back into the blockchain world?
I think the simple thing is there's just some practical parts of the AI pipeline that are very costly. There's a reason why NVIDIA is the most highest market cap company in the world right now. And it's because, a lot of the training phases are hard, but there's still annotation. So like Scale that was bought by Meta, Scale AI. There's several other annotation companies, Mechanical Turk. There's like these very nuts and bolts practical things that if you don't necessarily need all of those things to exist in like one entity or one data center. There's ways that you might be able to just get economies of scale and kind of like the same way the way the gig economy works, like Uber, you might be able to gig economy either the annotators or GPUs or just basically different parts of the model formation stack. I think there's some stuff longer term. I know like Near and a few others, OX Chain and stuff. There's a few others that are kind of working at prominence. So like which apps actually made the whatever the result. So like, did they steal it or was it proprietary? Yeah. I think there's a lot of stuff that can go on with that. And there's even a lot of regulation coming out that starts making it seem like that's going to be almost like necessity. I don't know if it necessarily, nobody's going to mandate it on the blockchain probably, but I think there's a potential place that it's like a neutral place to attest that this was, originally displayed here. And then honestly, like there's the sky's the limit. I mean, I think eventually, actually, this is like a core thesis I have with why blockchain. I think if businesses today not only pay a lot of money to either intermediaries like Visa, or just like have time value of money with long settlement times. I think blockchains obviously fix both of those things. They're way less costly and they settle near instantly, especially like high performance ones. So you can cut both those costs, but I think that'll get even more drastic as AI comes and they're gonna serve some model and get paid for it, and they're gonna want to spend more money to make that model better so they can get paid more. And if they're waiting, end of the day for settlement from Visa or multiple days from Wire or whatever that might be, ACH, like all those rails, some other model is just going to be able to iterate faster if it can accept the payment from the whoever was, serving it, and then kick back and buy more compute, buy more data, buy whatever it needs to be better. Like that. Doesn't necessarily need to be AGI or anything like that. It's just commerce. It's just whatever thing is iterating the fastest tends to win. And I think speed of commerce is just going to get more and more just with more tooling. Like even just normal people making a website are going to want more access to more data and more things. This doesn't need to be some sort of singularity future for like AI taking over for this to be an economic benefit. So I think it's just kind of like all parts of the stack in a very practical way, and then you have some more advanced use cases as regulation and the AI space matures.
Yeah, it seems like a natural evolution of where we're going through this kind of whole digital revolution we're living through over the last 20 or 30 years, that the concept of something with AI capabilities sending a wire kind of sounds farcical, right? So it's almost as stupid as a crypto manager sending questions through a fax machine to a crypto project, right? You're kind of mixing up tech that doesn't sort of fit together. We've found in our business, particularly with some of the younger guys, right, whenever you get kind of more bearish on the crypto landscape, as you sometimes do as prices move pretty dramatically, is, send them down to a bank to try and do something simple, right? Like get a work credit card or something like that and work through the 40 pages. It just feels like an obsolete kind of way of doing business. So, to your point, that speed of finality, basically we live in a point and click world, and it feels like industries that aren't point and click are just going to get disrupted. I think in terms of our history with Solana, our firm's has been an investor in Solana way back since 2020. We got an incredible opportunity. We built a thesis that Ethereum would be an outstanding piece of technology and would be a leader in the smart contract segment of the crypto protocol stack, but it wouldn't be the only one. We built a view that there would be multiple apps across multiple use cases, most of which we wouldn't have even dreamed of back in 2020. But blockchains would rapidly congregate around differentiated features they had to offer app builders. Speed, security, whatever it may be, that sort of made them better suited for better use cases. After we did that work, we then invested a bunch of money in Solana and got the opportunity to buy from a seed investor for Solana at actually 22 cents, which is one of the best deals we've ever done across the firm, and very happy to have done it now. At the time, however, it was completely off consensus. Everyone, Solana and other blockchains were trading at sub $500 million type levels. Most people assumed that battle had been run and won. Ethereum would be the dominant smart contract chain, just like Bitcoin is effectively with a store of value today. Got a lot of questions from our LPs about why did you do this? What's the thesis here? How can Solana or other chains grow to get some market share? How would you have answered that question back in 2020?
I think the main power of blockchain is this kind of permissionless collaboration, and the nature that in the scaling solutions for most other chains have kind of these fragmentation layers or give up on permissionlessness, one of those two. And Solana is really pushing the needle on having those both hold. This isn't some sort of trilemma thing I'm talking about. It's just like very practical. Like which thing are you laser focused on deriving? And so I think the collaborative thing, you see that all the time. Like so let's say like the Fidelity or whatever brokerage account, all these things, they have a bunch of services. If you have just like an open database and everybody can kind of programmatically interact, you can have any number of entrepreneurs interacting on that data, whether it be, equities like in the Fidelity's case, but also just different currencies. Basically, any market can be made on that stack, and any entrepreneur can come in and, execute their business. And if it really is permissionless and they all feel like they're on the same footing, you'll get some very high quality developers doing that. And then if you just reach the scale, then they can all do so without having to fragment off. Even when they become popular, they don't cost cut into some other business. They don't affect. So like on Ethereum or a lot of these other blockchains, they have global fees and global state contention. So if one business is doing well, it can price out other businesses, which is what you kind of saw in some of like the NFT crazes. That doesn't really happen on Solana, and it's kind of our commitment to the businesses to continue to grow. So you can have these kind of different margins of businesses across different sectors. So payments is almost always going to be a fairly low margin business, but you can have that next to a very, high margin perps or other kind of asset business, and that network effect in one place with all these entrepreneurs is just going to beat out the Fidelity and the other these kind of like entities that control the whole stack, because I don't know, maybe this is me being overly capitalistic, but like any, competition is good and it facilitates really good apps, and you're just going to come up with the best outcomes. And it's just our job is to make sure that the frictions in the way of that ecosystem as low as possible, because finance tends to go to the lowest friction. And so that's like core to the thesis the entire time has been lower the friction and get all these permissionless app builders all in one place.
Yeah, I think that's an interesting point. It would be my perspective, and I'd be interested to see if you agree that the success of Solana has probably pushed Ethereum to upgrade and change faster than it probably would have without Solana. Right? Yep. And I think, as you know, I know you're focused on Solana, but we're all blockchain advocates, right? We all think blockchain can change verticals and disrupt whole parts of the global economy. So anything that makes it simpler, easier, faster to use, I think is a step forward for all of us in the industry. Yeah. As we look at where Solana's headed at the moment, we're starting to see some pretty impressive banks like Mina Bank and the others out of Asia starting to use Solana Pay, and we're seeing this I'd say insane rapid adoption growth rate around stable coins, around that sort of institutional cohort. From your vantage point, where you sit at the foundation, there's been a lot of talk about institutional adoption. It does feel as if we've kind of crossed that Rubicon of just speculation and institutions just doing it so they can answer a question at a investor meeting about what they're doing to blockchain.
Oh gosh, you're speaking my language. I call it like I'm the technical person, so my interaction is just like some R&D department needing some sort of blockchain exposure, blockchain strategy. But
so when the CEO gets up and he's worried about that 50-second question he gets at the institutional lunch, what's your blockchain strategy? He's got something to answer. It feels as if we've kind of moved on from that though, right? Like it feels as if with various moves, with profitability, with people like Robinhood coming out and saying, they make a factor of 3 or 4 times more profit on a crypto transaction than they do on a share transaction, that people are starting to actually get the cost advantage, right? Not just the it's not just let's just use a new tech to learn about it. It's actually we can remake our whole cost stack here. Do you think we're there? Is that how you feel?
I think there is probably a little bit, very clearly heading there, though. I mean, you see what happens and how quickly, like I said, finance tends to flow to that of least friction. And kind of what you're saying is this cost cutting thing. If something is, helps a business operate better, finance is literally only there to clear markets economically, like kind of price setting and give people, efficient prices like that. That is the service they're providing. And the platform that gets in the way the least and allows for successful businesses to flourish, they're just going to be better than the businesses that don't make use of those good rails. And I think that's really what you're seeing with, all the big, payments providers are in a huge battle right now. Visa, PayPal, Stripe, they're all getting on the game. You see that even today, NASDAQ with the FTCC was talking about tokenizing their stocks on chain and being able to certify them as, not just a representation of the equity, but just like actually issued on chain. So these things are, I would say so that's certainly where it's headed. Is there platforms today that issue in tons of volumes on those? I would say we're not quite there yet, but just like I say, we're kind of like email, where they just started using it for business purposes, but then just a few years later you're using DocuSign to sign billion-dollar contracts. Like it just feels like we're kind of in the early stage of that, but you can kind of, I think most people now can see that's clearly where we're headed.
Yeah, it feels like it really does feel like a step change over the last 6 to 12 months. I think particularly feels like stable coins have given a lot of traditional finance players something tangible and, not to make them sound too lazy, but something they can explain to their risk committee that makes sense for them to invest capital in, right? Because it's a tangible, easy use case for them to put in front of their boards and their risk committees is something where they can kind of operate. If you look across the finance space, it's not one known for growth, right? So you've either got two ways to grow profits. That's either increase revenues or cut costs. And we are seeing pretty step change stuff, particularly which Solana's taken the lead on that, right? In terms of showing how you can do blockchains at scale, and how you can actually dramatically reduce the cost of those transactions.
Yep.
I was
just gonna say that kind of the initial thesis for some of this stuff is like decentralized NASDAQ. It actually was kind of a little bit that it was actually supposed to be blockchain at NASDAQ speed. So the idea is that you can put finance and this world of finance on chain, but the decentralized version is going to be look a lot different than the more centralized versions, and that difference is what makes it so the traditional ways of looking at it have been slow, or they haven't quite got around it. But you're right. I think that stablecoins is the kind of that gateway drug where you have all of the payments providers talking about these being the room temperature semiconductors of finance, where you all of a sudden have this like highly liquid free asset that anybody can form primitives off of, and that's, you're right. Like I think that's what's really starting to get people to understand what this industry is all about.
We spoke earlier about some of the competitive pressure that Solana's put across the protocol ecosystem, forcing others to kind of move faster and upgrade and continue to sort of try and offer more capacity at cheaper, more block space effectively at cheaper costs. What's on the horizon for Solana? There's a lot of talk about fire dance and other upgrades. What can we look forward to in the short to medium term?
So I think we don't really actually market that much our upgrades. We might actually start a little bit, but Solana has improved basically every 3 months with a major upgrade since inception. It's very consistent. It's just normal, high performance computing kind of iterative development that we do. We just call them, we're on, I think 20.3 right now, so it says it's just basically, or 2.3, I should say. So it's basically just like, and then we'll do 2.4, then we'll cut 3.0, and then go to 3.1. It just happens every few months. And so that has just drastically improved the performance and reliability and stability for Solana. It's not, magic why Solana is way more stable today than just a couple of years ago. But I think, so now you have like this very, very battle tested. We have all the data that has got us to this point to understand building a robust protocol. We also have some big named things. You mentioned one of them, which is called FireDancer. That one is a second client that has been built from the ground up for performance. And they've shared, while it is a completely separate code base and the same spec, it is shared a lot of the high performance computing with Agave, and the Agave team is also very much improved, and they have they have a whole performance team that's really pushing the deal. So when FireDancer comes out, we'll have 2 totally independent clients. We actually have 2 more in development as well, and then on top, like more protocol level stuff, there are some really major upgrades coming in the next year. One is the entire consensus algorithm is going to simplify a lot. It's called Appenglow. There was these academic researchers from ETH Zurich. It has nothing to do with Ethereum, but it's a very academic, like very, very high quality university in Zurich.
Yep.
Some of their researchers started looking at Solana, and we started working with them, kind of responding to some of their critiques, and then yada, yada, yada. They have a fully fledged, like new consensus algorithm that really fits in with the protocol. So it's in spirit very similar, but to what is currently running on Solana today, but is a major upgrade and simplifies a lot of things pretty drastically. So that should be rolling out in the next year. And really, it's about it is provably the fastest that people can prove today in terms of coming to finality, and basically with a decentralized validator set propagating and agreeing on information. And so it's really kind of getting to actual like traditional finance and traditional payment rail level speeds. You're never going to get to just one computer agreeing with itself. There's some overhead with consensus, but this is as efficient as you can do it at getting that. And then it also opens up for a couple other major upgrades. They get kind of technical. One's called async execution, but the other one that I think is really interested, that's a little bit farther along, is called multiple concurrent leaders. And this one basically makes it so you can have the blockchain basically function and start processing in different locations at the same time. And this makes it so you start being even better than a centralized solution in some ways. So again, a blockchain is never going to compete if you're living in New York and sending your information to the New York Stock Exchange in whatever, New Jersey. But it's going to be microseconds feedback. That's never going to be, that's always going to be faster than trying to distribute to computers all over the world. But if you're in Tokyo, you have to still send all the way to New York to get to New York Stock Exchange. What multiple concurrent leaders does is, have maybe one of the leaders is in Tokyo, one of the leaders is in basically every major market center will probably have, there'll be financial incentive to have a leader. And so if I'm in Tokyo, I just have to send to my closest leader, and then they can respond that they're including me in the next block. So I don't have to wait for the total round trip to New York to understand that my block is included. Now, in order to get the exact ramification of my transaction, I still have to wait for the consensus to happen. So it's not like strictly better than New York, but it starts becoming actually better at the speed of information and inclusion than centralized systems. And then you get all the benefits we talked about earlier, being decentralized and permissionless. So it maintains those properties while still having this, fast data inclusion and propagation properties. So, and then all the resiliency and other things that 24/7 markets need.
So that's kind of a blockchain way of creating sort of a co-location concept. Is that right?
Yeah, exactly. So it's kind of like a co-location, being able to basically, but it's a more of like an economic solution. The idea is the leader gets to collect fees from those who submit to it, so they're probably going to just naturally decentralize to wherever market participants are forming, and then you get that kind of local. It's like it's a little bit different than co-location, but it's because co-location
it's not on the same spot, but it's like a geographic sphere, a big co-location across a whole kind of time scale, I guess.
Yeah, you have these like economic hubs that are around, and it's still the blockchain at that point is just syncing the data across all the markets. And it gets kind of technical on how you combine all the information from all of them, but there's basically a in protocol deterministic solution on how the different information from the different markets propagate together. And so that's like, I think that's kind of we're calling it kind of the end game. You're never done, you're never complete, but I think once you get to that, it's ahead of the current iteration of traditional finance, which is our competition. That's when you start getting very meaningful. Right now you have meaningful differences in terms of app creation. So you can have that network effects case, but this is a very technical at the actual computation level that is better than TradFi in a lot of ways. And that's when we think we're very clearly disrupting finance.
Yeah, I think that's the trend I guess I've seen throughout my career, that you get certain users that will use technology for certain kind of utility it offers to them, and then you get this step change when all of a sudden it disrupts the old technology. I mean, interesting one I got to see sort of at the coalface is, biggest profitability driver for media companies generally around the world, particularly in Australia, was, real estate pages, people advertise their houses. And, no matter about 3 months when the internet broadband speed came along, good delivery of photos, all of a sudden that market literally went from 100 to 0 overnight, as the utility of the online version, which had been around for a couple of years, but was clunky, hard to use, had some kind of, technology forward, people clicking around in it. All of a sudden the utility goes from, this is actually a much better product now than the traditional one. And then everyone moves at once, right? Everyone moves because the utility is there, not just the perception of using some technology or the curiosity that comes from that. I think, one of the best and worst parts about crypto is it's very tribal. people are very passionate about it. I mean, the great thing about that is you do form these ecosystems, you do form these people that provide information and insights that you just don't get in traditional capitalistic markets, where people are willing to educate, willing to spend time, willing to publish things like, dashboards and those sorts of things that you would never see in a traditional markets context, where people just freely make this information that they've put their own time into available to others. Like we see in all online worlds, as you see a proliferation of information, a lot of it's incorrect and creates misconceptions. Yeah. You must see a lot of this sitting there at the foundation. What are the biggest misconceptions about Solana that you have to address and you wish weren't around?
I think the biggest one that still persists today is the perceived instability. I think a lot of blockchains got released, and then there was some iteration, but they basically set on the same spec. Solana has improved like I said, very drastically since its inception. So yes, it was unstable for the first couple of years. But when you're really pushing the needle, Solana rebuilt basically every part of the stack and really prioritized stability for sure, but speed and performance as well, and that just takes some engineering time. So I think, and Solana's only had one. I mean, any downtime is not acceptable, obviously, but one downtime of 5 hours in the last 2.5 years. And just like AWS used to have a reputation for going down all the time, it was pushing the needle on what cloud computing was. Now it's known to be, basically it was kind of its reputation until it wasn't. And all of a sudden, nobody thinks about AWS going down, or that's not like a mainstay in our economy. And so that's the same thing with Solana. And I think another thing, going back to what I was just talking about, Alpenglow, and having multiple clients, is when you have multiple clients in the way that the Alpenglow consensus works, it actually increases the resiliency, because we can get into the technicals of it, but basically if any one client is under 40% of the network stake, which is pretty realistic to happen if you have 4 clients, but if any one is under, if no one of them is over 40%, then any one of them can go down and the network won't go down. And even if there are ones even if there is one that's marginally higher, they can always hop swap to one of the other ones. If there's multiple clients and the majority of them are agreeing and one of them maybe had a bug, then the network can naturally hypothecate back onto the client that didn't have the clients that didn't have the bug. And then you just basically just get incredible resiliency of the network. So that's one of the things that we were really excited about with Alpenglow, is it also increases the liveliness.
Okay. I mean, we spent a lot of time and a lot of our investment focus around the app layers across blockchains, and we think the one in the app layer in Solana is incredibly vibrant. It's taken there's a bunch of examples, but it's taken a concept that's relatively been around for a number of years around meme coins, and seen a number of projects effectively scale that at like insane speeds and create sort of revenue streams that to be fair, blockchains never seen before, right? In terms of the growth in pumped up funds revenue line and those sorts of things. As we sit here today, Solana's doing a great job building new markets, building new markets around things like that, stablecoin growth. What's not on people's radars that is getting a lot of attention now from developers and builders that you're really excited about over the next sort of 3 to 5 years?
I mean, I think an oldie but a goodie is what's called DePIN, decentralized physical infrastructure networks. Helium is kind of like the oldie but goodie here, and it's seeing a lot of growth. They're doing a lot of data offloading of actual cell phone carriers. I live in Seattle, and T-Mobile uses them. And I talk to random people at T-Mobile, and they actively talk about Helium. They know it's it's just a part of their business now. And so I don't even have to tell them, like when I say I work at Solana, they're like, oh, you know Helium, blah, blah, blah. Then there's a bunch of more of them coming in. Again, we talked about AI earlier. A lot of them sit on the various parts of the AI stack, from either data gathering and annotation to, hostings. But I think that is a very big industry. The other one is probably similar to what we talked about a lot, like this, it's near stablecoins. But I think loosely calling it maybe PayFi, where it's not just payments. So payments is in of itself great. Like I think you can do a lot with just, me transferring to you. But the minute you sit finance composably within that, so say you want to be paid in whatever currency you want to be on Australia and I have US dollars, the automatic swapping and the Forex of that or whatever for your business, you can basically have it so point of sales or people who want money don't necessarily even have to care who's paying them where in the world and what currency they started out with. The market is just going to be made for them, and you're automatically going to get your currency if you want. And you don't have to pay Visa 3% for that. You just pay some fraction, a few like a couple bips. It's that those are really, really efficient global markets, and I think you'll get a lot of businesses off of that. So like this is where the internet capital markets really comes in. Is that once you have this confirmed order flow, you can start issuing capital from that, like asset. Like so, if I have some sort of capital expenditure I want to finance or whatever, asset around my business, I can issue a token or do essentially like an on-chain IPO of sorts, and have a very certifiable revenue model back to the people who upfronted capital for that business. But it's not an ICO where you're promising something of tomorrow. You have a certifiable business and you route verifiable transactions through it. And I think that's the kind of like this payments and other whatever commerce part that can feed into businesses going onto public markets in a very transparent way of what the business is and what you're buying. I think that's like the next evolution of both. One, I think it's you see all the time IPOs just don't go great. Like Figma releases at some like absurdly low valuation and costs a bunch of money. You could come up with like way more efficient, less middlemen and less friction based solutions of doing that, while also having this very fast, very performant, low friction payments infrastructure right next to it. And I think that's kind of like that. Obviously, what I just said there has a lot of little pieces in place, but you're already getting it. Like Pump.Fund basically is that. You have this, people pay for these memes and they have this trading infrastructure and you can kind of see how much they generate in terms of revenue, and it issues back to a token. That framework will be tried in a bunch of different ways. Some will be crazy and fail, but I think that what I described is basically just a reskin version of Pump, and there'll be a lot of people trying that because obviously if you have a successful business, it's a great way of capital formation and using your successful business to expand. And I think you'll start seeing that a lot.
Yeah, I think the payment space just stands out to me as well, right? Like you think we're in a world where, politically the living pressures seem to be proliferating across everyone, right? So it seems to be probably, if not the number one, the top three kind of political issues globally. Yet people, every transaction seem to be paying 1% to 3% extra over the cost of goods, right? Which is basically a whole year's inflation embedded in every transaction you make. Yeah. That feels completely unsustainable.
Yeah, exactly.
I think, we spoke around institutionalization of this space and more institutional adoption, particularly that sort of high level finance sort of perspective. As institutions look across the various blockchains, what's the key thing you would hope they'd understand about Solana and where it fits in the marketplace?
It's a good question. So institutions naturally are going to want to own as much of the stack as they possibly can. You saw this actually at the birth of the internet, where all the institutions, all the big enterprises were building their own internets. They didn't understand being out on this kind of global and where the internet was going to go, that access to every person was incredibly beneficial, and not having to, not having your own intranet for every big corp was, that was going to be stifling your growth. So I think that's the same thing here. If you are on an open permissionless blockchain, Solana, then you have access to global markets that are already built for you. You have an entire ecosystem that's going to transparently work with you, and you just have to figure out a business case. Like, why are you building on a blockchain? Is like the first one. You can pretty easily understand some of it, like the transparency of it, and that the low frictions of how low cost it is to transfer value. But the real actual magic here, and I think we touched on this a little bit before, is the ability to actually own assets from just sovereign money. an institution has to understand how to make that part of their value prop when they're issuing something. So like it's pretty easy to see like a Circle who issues USDC, they're issuing it out and anybody can use it so that a business can interact with that USDC just like a human can, a normal person can, and they can create markets and trading and all this other stuff permissionlessly. Nobody has to ask Circle if they're going to make a Solana USDC trading pair on a market. That they don't have to ask Circle at all. So these institutions have to figure, and it's an amazing business. They what they do is they just collect the bips on the money market underneath. But so this is where the institutions really need to start thinking about, okay, this open internet gives me so much access and so many potential collaborators that actually enhance my business. I just have to figure out as I'm expanding, I can think of some of these pieces that make sense a lot to me today, but I would just encourage them to think about, just like at the early internet, your business is expanded on what is possible and how do you make use of the collaborators and the very liquid markets globally.
That's great. Thanks for joining us today, mate. It's incredible to get your insights, unique insights from really much at the core and inside the tent of what's going on with Solana and your broader views around what's happening around the crypto space. So can't thank you enough for joining us today. Thanks.
Yeah. Thanks for having me.
Thanks everyone for listening to DACM Insights. If you found this interesting, please sign up to receive our weekly newsletter, and there'll be more of these coming as we look to introduce more projects that we find interesting across the crypto space to all of you.